Out of all of the different futures markets that we look at, which there are a total of 10, copper was the one market which today gave us some of the best volatility entries. Now, what's even more interesting is if you come into something like a daily time frame chart, inside of copper, we're getting the first pullback inside of a new bullish trend. And with this first pullback today, we had a long side entry. If we start the conversation first with the HG futures, here's the doomsday aggressive models, which were the ones being used inside of copper. And the setup came in that lunchtime hour where price sold off right into the volatility box zones. Now, a few different reasons I don't like this setup. One, it took place during that lunchtime hour. You know, if you've watched any of our previous videos, that this is an hour I like to avoid trading. And second, this breach happened towards the edge of an hour, again giving us less probabilities than usual. Now, in spite of all of that, you can see how with all of the edge signals, even though price tried to drift down lower, we had that rapid price fluctuation right back to the bullish and short side of the models. So that gives you an idea of the strength of the bull still hanging around here. Even though it was a lunchtime hour, even though we didn't have that perfect setup, this pullback on a daily time frame trend still led to a nice entry for that particular hour. That led me to go look at a few other stocks that I could still take advantage of. So if we look at some of the typical copper stocks, you have Freeport, you have Southern Copper, and in both of these, you have the new bullish trend along with the pullback to that new bullish trend. Now, we've already bounced a little bit from there, but the next question I wanted to answer is how effective is this pullback entry? I understand I missed that ideal entry inside of the HG futures, given that I don't trade during that lunchtime hour, but is either Southern Copper or FCX still open for a nice trade? So to do that, let's backtest this. Here's a sneak peek into a new backtester that I've been working on. And as part of this backtester, you can backtest the first bull pullback inside of a new bull trend. So let's use that inside of Freeport. And if we zoom out here, we get a feel over the past 5 years for what the P&L has been. You can see that with the P&L histogram down here, along with how many winners versus losers, so the win-loss rate, along with what the average performance was and the trade duration. Now, instead of 5 years, let's load in the max available data here. And with our max available data, this does not look like a good strategy inside of Freeport Morgan, the first bull pullback. However, if we narrow this down to say just the past 10 years, now we're seeing that initially the strategy didn't work all that well, and lately it's been working better than what we saw previously. And you can see the string of losers right here. So the first bull pullback inside of Freeport Morgan still has a positive P&L, but in terms of the win-loss rate, a little bit less than 50%. Our average winner is greater than our average loser, but the fact that we have less than that 50% win-loss rate and a P&L gram that has not been consistently positive, histogram, I think gives me pause to this particular strategy. Now you might be wondering, well, okay, so how do we take advantage of FCX then? Well, let's backtest. Instead of waiting for the pullback, let's see what happens if you use momentum. And actually, before we do that, let's come to our pullback. And instead of using a trend exhaustion exit, let me use a trend switch exit, see if that improves things. We see a similar pattern and our win-loss rate worsens. So that overall inside of this copper stock doesn't look like a good strategy. If we looked at the same strategy but inside of Southern Copper, we see something similar in that we don't have a nice win-to-loss rate, but we do have a positive P&L histogram. And here, unlike what we saw inside of FCX, that P&L histogram has been read only for a brief bit of time, after which the strategy has been a little bit better. So between the two copper stocks, if you did have to pick one, Southern Copper is the one that's looking a little bit better. It's backtested well, and today we're even getting a nice momentum burst with that 3 EMA crossing above the 8. Let's backtest that momentum entry here and see if that's better inside of Southern Copper as well. Zoom out, and here, just as nice, 5 and 0 with that momentum entry, which today is also triggering. We have all of our conditions that the backtester is using being met. So there you have it. What we started with was taking the volatility that we saw inside of copper futures. How did we recognize that volatility? Simple, it breached our futures volatility box models that we were using for the copper market. Now, this happened during the lunchtime hour towards the tail end of it. Not a time, at least I like to trade. I'm not sure about you. So there, we started expanding our search to copper stocks. There are two that we looked at. One was FCX, and the other was Southern Copper. Now, between the two, Southern Copper had the better of the two backtests, and it even had that nice momentum setup today compared to FCX, where we have yet to see that, even though the two charts look similar. So if you had to pick one between the two copper stocks, Southern Copper looks to be the winner, where you can still take advantage of what seems to be the shorter term momentum burst and play this overall backtest move, which in the past has led to some really nice gains. I hope you found today's video helpful. Take care, everyone. Good luck trading, and I'll see you in our next update.